Hey everybody, happy Wednesday, November 6th. I am flying solo today, so feel free to drop in any questions or whatnot in the comments. And for those in the United States, we've got the election behind us. We're only looking forward. So there's a lot of things in the future, how energy policy and energy decisions might be made into the future. So, with all that said, my name is Brian. I'm with energyrogue.com, and I'm going to walk you through what are the key elements for natural gas and crude oil. If you trade those commodities, if you are at a company that uses those commodities, or if you are at a company that produces those commodities, commodity markets are incredibly volatile. None of this is trading advice. Please read the disclaimers below, but I'm going to walk through what are the key elements of what you should know if you or your business is impacted by the volatility of energy prices, more specifically, natural gas and crude oil. We're only going to cover those today. Our service does cover refined products, natural gas liquids, and crude oil, natural gas, and so much more than that. So anyway, I'm Brian, so feel free to ask any questions along the way. For those that are trading, looking at the markets today after the election reaction, natural gas is on the way back up. Crude oil is also on its way back up. So there's been a little bit of hiccups, bouncing up and bouncing down. And so if you want to dive in a little bit deeper on that, we do offer our service, and I'm going to talk about that and introduce you to our service at the end. So all that said, I am going to accept questions, so feel free to shoot them over. I probably won't ask them until the end, but crude oil and natural gas, what you must know. If you or your business has exposure, whether that be from buying the commodity, whether that be from selling the commodity, if your company is impacted by the volatility of these prices, then these are the elements and these are the things that you should know. And when I talk about volatility, I mean, you can just see from October 29th to November 6th, we've gone from $3 down to 250 to 275. So energy commodities at the core are volatile. So these are the things that if you don't know, then you are flying blind, and that volatility is going to happen with or without you. So that's what we're looking at, and these are the things that you must know. So first off, on crude oil, and I'm going to condense this down to its simplest form: oil production, refining inputs, imports, exports, commercial stocks, and oil and product stocks. So when we look at oil production, is it growing or shrinking? You know, that's going to impact your basic supply and demand. As it impacts your supply and demand, sometimes if oil production is going up, but your demand is going up, then it's kind of flat, which is why you also need to keep track of refinery inputs. Refinery inputs play a significant role because that tells you how much is going into the refinery, and really what they are doing with it from there is transforming crude oil into the refined products such as gasoline, naphtha, diesel, jet fuel, other products, distillates, other products that are there for ultimate consumption. So you've got production, refinery inputs, which some people stop there and say that is demand. Refining inputs is kind of a bridge to ultimate demand, because ultimately you don't fuel your car or big trucks with crude oil. You fuel them with diesel or gasoline. So there is an interesting interrelationship there. Then looking at imports and exports, how how the production in the United States, and we're going to keep this concentration around the United States, how the impact in the United States is really impacted on how much are we importing, how much are we exporting. Exporting is really new to the United States in the last 10 years. Prior to that, we did not export our crude oil. We actually used it domestically, and there is a unique relationship with the type of crude oil that is produced in the United States versus the type of crude oil that is actually refined in our refineries. Those are two different crude qualities. So looking at the volume of imports, what are we importing for those refinery operations, and what are we exporting tells you a little bit about the refining market and the production market. So these are the things that are valuable, and these are the things that are going to help you in understanding, are we growing, are we shrinking, what is this raw supply and demand. Commercial stocks and oil and product stocks. These these are things, and after this slide, I'm going to show you what I look at and what we look at as part of our community, and that is commercial stocks are the crude oil that is held by commercial contracts and held in storage. So a crude oil stock is kind of like a storage or a stored value of the crude oil. So if you have rising stocks along with rising production and refining operations have not expanded, that could be a bearish signal to the market. Conversely, if stocks are being drawn down, this could be a bullish signal for crude oil prices and the market. Then you have oil and product total stocks. This is everything on one side of the refinery, which is the crude oil input side, and then on the other side of the refinery, which is the refined product side. So there are stocks of gasoline, diesel, jet fuel, distillates. All of these are amalgamated into one number so that you can keep track what's happening in front of the refinery and after the refinery, and that gives you a more holistic view of oil production to consumption. So these are the critical factors on the crude oil side, and we actually crystallize that inside of our service into this balance, which tells us total supply, crude oil production, how much we're importing, and then conversely, on the demand side, how much we are putting into refineries, which is currently topping out at a pretty high level, and how much is being exported, which has ticked down recently. So this is an interesting indication, and it could be an indication of lagging stocks coming out of the ground. But when I look at the storage and stocks on this tab, you can see that we track commercial stocks right here. And this gives you a nice chart that tells you the 5-year minimum and maximum for this time of year. So let me zoom in here, and you can see that the 5-year minimum for this time of year on October 25th was only 421,000 barrels. We're only or 4 million, I'm sorry, 421 million barrels. So we're only 4 million barrels above that. So this tells you holistically, when you cross this off, you can see at different times, we built a lot of stocks during COVID, and that was because demand was paltry. So looking at this relative to history, it helps you tell stories about what was happening in the marketplace and at particular times. And right now, when we're looking at commercial stocks, we could say, well, arguably, demand is pretty decent. But let's not stop there. Let's take a look at oil product and total stocks, which is right down here. Well, that's also on the 5-year lows. So we are looking at the 5-year lows on production, or not production. I'm sorry, commercial crude stocks and crude and products total stocks. So alongside that, you take a look at supply. And on the supply side, you can see that we are setting new 5-year maximums. Now, this is not surprising because we are setting production records. The highest time we had before that was 13.1 million barrels a day right before COVID hit. And now we have built back up to that level, but it took a long, long time. I mean, that took 4 years to build back up to that level. But this is the reason that you take a look at oil production. What are the trends there? Refinery inputs. What are the trends there? And let's see. Hey, Richard, good to see you. Yeah, and yeah, greetings from Houston. Little good weather, I think. Yeah, you're having good weather right now, but there's definitely some interesting perspective in the oil field today. And I think you're referencing the election. So there is going to be probably friendly policy when it comes to oil and gas. However, I would probably say my personal opinion that the flat price of crude oil is going to dictate that a little bit more than some of the regulatory requirements, or you're going to see 2 years of regulatory requirements really changing. So over 2 years, I don't see much of a change. It's probably going to be driven more by flat price. So on crude oil, we look at oil production, refinery inputs, imports, exports, commercial stocks, and oil and product stocks. Something that we recently launched is our Rogue Edge newsletter, which we send out. And we actually have a very simplistic bull bear for commercial stocks, oil and product total stocks, production, demand, exports, and the international. So if you're interested in this, send me a note, Brian at energyrogue.com. Be happy to talk to you. But this is part of one of our service offerings. We try and put things in a very simplistic format so that you can see oil production, refining inputs, imports, exports, commercial stocks, and oil and product total stocks. But these are the things that you have to watch if you are in the commodity markets, whether you are trading, and again, not financial advice, whether you are trading, whether your business sells crude oil or buys crude oil or refines crude oil or transports crude oil. All of this is important to understand because it's going to tell you whether or not we are going to be growing or shrinking, what these trends are saying. For instance, one of the trends that we track that is pretty interesting to look at is on the crude oil production total change. What you can see here is how much each basin is really contributing to that production change, because every single month we have a decline. And we look at the cumulative on the oil from new wells, but we also take a look at decline. And we separate that into two different variables so that you can see that our crude oil decline has been, well, this shows decreasing, but it means that we are increasing the volume of our decline. Every month, said a different way, we are declining over 600,000 barrels a day. Take that in reference to 13.5 million barrels a day. That means we have to bring online over 600,000 barrels a day of new production, which we currently are doing, to add volume to the supply base. Or said a different way, when we look at crude oil on the supply side, let's take a look at this. And I'm going to take this uptick from 13.2 in September to 13.5. To grow that 300,000 barrels took 3 months, and that meant that each month we grew by 100,000 barrels. Or said differently, we brought on 700,000 barrels a day of new production to offset 600,000 barrels a day of decline. So what that means is every production level that we're at, we are treading water unless we add rigs. And rigs is another equation when we take a look at crude oil production, refinery inputs, imports, exports, commercial stocks, oil and product total stocks. And these are the other factors that weigh into that decision. Geopolitics. What is happening in the geopolitical spectrum? Richard actually just mentioned this, and the oil field is getting a different viewpoint from the U.S. over the next couple of years. OPEC Plus, they influence the market significantly with some of their supply monitoring. The global economy, what that looks like, and what the state of the global economy actually affects and means for oil demand. And lastly, the active rigs. Now we dive in a little deeper on our platform here, and we take a look at the active rigs in the United States. And what you can see is that we've been on a steady trend down. And that steady trend down has really led to kind of a stalling of production. And so from the beginning of 2003 to today, we're down close to 170 rigs. That is a lot of economic activity that is actually lost in the equation. So these other factors weigh into the decision: geopolitics, OPEC plus, global economy, rigs. And again, this is the reason that we actually add some of this to what our newsletter comes out. And if you're interested in this newsletter, you can sign up. Rogue Edge is only $89 a month if you want access to this platform that gives you deep dive insights, plus access to our Discord room. That is $179 a month. This is the cheapest investment you will make. If you're spending an hour a month on trying to figure out supply and demand and what the market looks like, you're wasting time and money. There's a cheaper way, there's an easier way. And yes, I like to think we have the solution. So Rogue Edge would give you access to this, would give you access to give you access to some of our charts. And then for an all access pass, it's only $179 a month. Plus you get our Discord group, which we talk about the market each and every day. So the factors on crude oil, just to recap: oil production, refining inputs, imports, exports, commercial stocks, oil and product stocks, geopolitics, OPEC plus, global economy, and rigs. And that can be seen right here in our bull bear stoplight. We kind of like that stoplight system. So natural gas. What is important on natural gas? Well, a lot of people start with production, because production looks a lot different today than it has in history. We are producing over 100 BCF a day, and take you back about 3 or 4 years. I'll show you a chart in just a second. We were only producing about 75 BCF a day. So we've grown over 25 BCF a day, or said a different way, we've grown by over 33%. So that is a massive, massive growth on the production side. Weather is really going to impact supply and demand, both in terms of heat in the summer for power demand and cold in the winter for furnace demand for residential, commercial heating loads. LNG exports, this is another one that impacts domestic supply, how much exports we have going out. I should include here international markets such as Mexico, because we export a lot to Mexico. Canadian imports, how much do we get from Canada? And the demand, the overall demand for natural gas, and what that means relative to history. So let's take a look at a quick view of our newsletter that I just sent out yesterday. And again, we take a look at storage, weather, production, Canadian imports, demand, LNG, Mexico, and international. We put all this in one place so that you don't have to go searching around for it. And again, this is part of our Rogue Edge service. If you want to get this, just sign up. It's $89 a month, or less than $3 a day, and you have access to this, and this will be emailed to you every day. But typically on our site, well, I usually start with kind of supply and demand. What does the supply look like? What does the demand look like? And demand has various components, but let's first start with supply. So when we look at the supply equation, believe it or not, we do have LNG imports. A lot of people forget that, but it's about 100,000 MCF a day. But let's just take you through a little history lesson here. So back in 2018, I'm sorry, 6 years ago, we were at 75 BCF a day. We are now up over 103 BCF a day. And what we do when we take a look at our trends is we identify what our peaks were, that trend, the flattening, and this growing. And we expect it to grow in the fourth quarter. So we do expect it to grow, but that's not the end of the equation. Again, when we look at all the different components, production is one piece of it. Or again, this is one line item in here. What are we expecting? Like this was from yesterday's gas flows. We had some Permian Highway production maintenance, or not production, pipeline maintenance. But we take a look at storage, weather, production, Canadian imports, demand, LNG, Mexico, and international. But let's take a look at the demand side. Well, no, before we'll stay on the supply side and take a look at Canada. Canada, if oh, we got it. We got Mr. Bill Shanahan. He is joining from the road, and it's a little choppy. It might be because of the cell signal out in the Permian. So Bill is on location in the Permian. And
hey, Brian, anyway. I'm finally outstanding in my field.
Just like the Scarecrow, outstanding in his field. So let's welcome Bill Shanahan. Right. He is coming in. He is coming in from the field, from the Permian, and as he usually says,
you look like a banker in this.
He looks like a banker. That's what he says.
I look like a banker. Hey, listen, Brian, I was listening to you on that oil. You need to throw in that we have 2 refinery closings next year.
Yes. Well, that was actually covered. That was actually covered in our most recent edition of Rogue Edge, as we discussed down here when we talked about crude oil. We talked about Lyondell's recent announcement because that's a very rapid one right now. So yes, we actually cover that, and that is actually, I mean, Lyondell is like 230,000 barrels a day. That's a pretty big one. So that's a large one.
I think 136 million.
Yeah,
136,000.
So when we look at refining runs on the crude oil side, let's take a look at that real quick. And we look at refiner inputs. If we are inputting over 16 million barrels a day, that's going to take us down to 15.5 from our max. So this is really going to change the landscape, and it's really going to change some of the refined products, how much we import, how much we export. So, but we have transitioned over to natural gas and what's important over there. And we were starting to talk about natural gas production, weather, LNG exports, Mexico exports, Canadian imports, demand, international markets. And again, this is what our members receive.
I wish there was a good place I could go get some weather information.
There is actually right on our site. If you click on natural gas and you have weather, we are able to see what the population cooling degree days are, which are decreasing because of this time of year. And then you take a look at gas weighted degree days and what that looks like. And we are trending up into mid-November. We are starting to trend up on the gas weighted. and we're trending up in a big kind of way. And the population weighted is finally breaking that 50 bar. And that's a big one. So there is definitely a good place to go for that. And again, we provide this on our Rogue Edge, on our weather, and we show where weather is relative to history, but understanding production, understanding weather, also the time of year. If you are in, we are kind of in the in between right now. We're not really in summer, we're not really in winter, and every day it kind of depends. For instance, Richard down in Houston, does your air conditioner, is it still running? I think it probably is, maybe a little bit. My furnace is running up here at least a little bit. So we're in that in-between stage right now. But what do you think about our stoplight system, Bill?
Man, I love this thing. And it's almost getting almost appropriate because it's almost Christmas. So it's going to be like our Christmas stoplight system.
Yes. Well, it's got green, it's got red. So so when we look at storage, when we look at weather, LNG exports, Canadian imports, demand, international markets, other factors that are critical, what are production declines? What is our new production? What are rigs, ducts, take in line, turned in line, curtailments and forecasts? This is part of the reason that this comes in play. For example, when we look at the production side, and this was just posted yesterday, Permian maintenance is taking off 1.5 BCF a day. So that impacts production. And you can't just look at one number and say that is what reality is. There's always another story there's always another story out there.
Wall Street loves to use confusing terms to make you think only they can do what they do.
In other words, we're democratizing this. Since we are in the election season, we are democratizing this and democratizing that impact so that you can take control on crude oil, natural gas, so that you could influence your future. And Richard, thank you for texting that. Yep, the air conditioning is still on in Houston. That tells you at this time of year.
West Texas, Brian, they run the heater in the morning, the AC in the afternoon. So they're doing both.
Yeah. So Richard's going to be in that in-between stage for the next couple of weeks, or at least Richard, until we look at, let's actually look here, because I think, do we have Houston?
I think we were saying November 15th, weren't we?
No, I was seeing which cities we had here, and we just have the regions. So in the regions, he would be the East, South, Central, and the East, South, Central is not quite as big of an impact right now. So on the population heating degree day, but the gas weighted is a little bit higher because of Richard's AC. So here's the factors that we look at: everything: production, weather, LNG exports, Mexico exports, Canadian imports, demand, international markets, production declines, new production. And I do want to show you something on the production declines. A lot of people don't realize this. How much production do we have, Bill?
We have about 100, last time I looked, it was 102 BCF a day.
Yeah, that's about right. I mean, we've had some days above and some days below. Yep. And until after Thanksgiving, thank you, Richard. Yep. After Thanksgiving, that's when it'll kick in. So when we look,
Richard, don't put up your Christmas lights yet. Respect the bird, man.
When we look at how much natural gas decline we have on 102 BCF a day, how much decline do you think we have, Bill?
I think the last time we saw it, wasn't it like, I don't know, I get those numbers confused with the oil numbers. So I think we were closer to like half a B or something like that.
Look at it. If you look at your screen, there's
Oh
a
no, man!
cheat.
Look at that, man.
There's a cheater. So,
Where?
so out of 102 BCF a day, 3.4 BCF a day disappears because of decline every single month. So, said a different way, much
So
like crude oil.
that is an average of 3%. And I think as the newer gas becomes more of the total, we'll see that increase because the newer gas is declining faster than the older gas.
Yep. And you can see that over time. Let me actually draw this back out. And you can see that
what
over
I think is
time.
somebody disagrees, they post in the comments, man.
What's that?
If someone disagrees with me, post in the comments.
Yeah. So listen, as the newer production declines, I mean, post something in the comments about it. But what that means is that if we don't add more than 3.4 BCF a day of new production, then we are going to decline or lose volume. We currently are below that, but we are gaining on it. And this is the key chart. This is the one that I love. This is our total production net change. And what you can see is from late last year to today, we've been in decline. So what that means is that we've been in decline. A lot of people don't think that because we're at 103 BCF a day, but in December we were at 105.8 BCF a day. So we went from 105.8 down to 100 and we've built back up to 103. We do expect some changes in this to happen in the fourth quarter. And again, for $89 a month, you can have access to this and stay on top of it every single week. We send that out at least twice a week. So production, weather, exports, imports, demand, international markets, production and declines, rigs, how many rigs we have at work, ducks and turned in line, curtailments, forecasts. So any other thoughts on that before we kind of summarize, Bill?
No, I think it's important to realize that there's some gas that's shut in right now that could probably come back on in a relatively short time frame. But the question is going to be if we get enough weather to get the price up, and that's where everybody's looking at. Because when the price goes down, and that's why you would need to watch crude oil, because if crude oil goes down, it's going to affect the gas in the Permian, and that's where a lot of our price volatility is coming from, is the gas in the Permian.
Well, and again, this is part of the reason that we actually designed these charts so that you could actually separate what is actually happening with the Permian. Said a different way, our Permian is adding production every single month. If you took them off and looked at Haynesville is in decline, Eagle Ford is roughly flat right now. Bakken is adding a little. Let's see, the Appalachia, Marcellus Utica is in decline, and the lower 48, the rest of it is in decline. So said a different way, Permian, Eagle Ford, and Bakken are the only places that we are adding. And all of those are going to be oil weighted. Eagle Ford probably natural gas liquids a little bit is irrelevant there. So
also when you have an oil play, you do have a liquids play as well.
Yep. So so all of these factors matter, and all of these factors, again, if you're trading the commodity or your business depends on the price of these commodities, let me ask you a thought process. If in 2 weeks or inside of a week, you have a 25% move of the commodity price, do you think that changes your bottom line?
Oh, absolutely.
Significantly.
Because the cost didn't go down, so it just squeezes net profit.
Yeah, well, depending on if you're a consumer. If you're a consumer, you actually like that 25% actually dropped in price. But we have kind of gone from $3 down to $2.50, down to 270 or to 275. So this is going to bounce around a lot. Again, if you or your business depends on these commodities, you need to stay informed. And that is the reason that we created energyrogue.com, is to provide affordable access to this, because all of this was taking way too long. And if you're spending an hour a month, not a day, not a week, an hour a month, you are being cost inefficient. You should invest in this because it gives you access to this robust data platform along with a guided insight that is delivered right to your inbox. So these are the
And
things
also,
that
and
matter.
also, you're not spending time pulling down information. You're spending time analyzing information. That's
Great.
a significant difference in productivity. And so
Yep.
that's the part that a lot of people forget. And when
Well,
it comes to gas,
if you're
by the way,
spending an
I think I
hour,
can,
what's that?
I said natural gas. I think I can make a case that consumers need gas about $3 for reliability supply.
I think that's a valid statement. So we are going to close it off. Feel free to ask any questions if you have any questions before we close it off. But
yeah, feel free to ask Brian questions.
Bill likes
Now, if
to
you
put
need to
me
know
on the spot.
out here in the Permian, I can help you out, or maybe go look at a well for you. Tell you how my Jeep's running, whatever that. I can handle those questions.
So crude oil, supply, demand, imports, exports, stocks. And on natural gas, very similar: supply, demand, imports, exports, storage. Then there's other factors such as geopolitics, weather, ducks, turned in line, rigs. All of these matter in the grand scheme of things. And if you want this conveniently delivered to your email to where you can actually look at a summary of what is happening in the energy markets, as well as this was an interesting study that we did this week on storage relative on a 3-year versus a 5-year, and that brought interesting results. So if you want to stay on top of it, come consider joining us. It's only $89 a month for our base product. If you want to unlock everything and actually open up the conversation relevant to you and your business, join Rogue Premium, because that gives you access to our Discord group, which we can answer you 24/7. We answer during the weekends, during the sleepless nights, all the nights that we can't go to sleep is when we're hanging out in Discord. So come join us. Would love to see you. I think that's all we have. Haven't seen any more questions pop through. Do us a favor, drop us a like, drop us a comment. Let us know if this type of stuff helps you. We're trying to close off the year providing you everything that you need to know so that you can hit the ground running in 2025 and actually make 2025 an awesome, awesome year. So, Bill, did I miss anything there?
You got it all covered. You remember looking at this slide right here, left or right, you get smarter the right you go.
Well, listen, folks, thanks so much. Really appreciate you. We're going to close it off here. Do drop us a like, do drop us a comment. Let us know how we're doing. We want to hear from you. So thanks so much. Have a great Wednesday. Talk soon.
Thank you, folks.